Hello, YouTube. Another bank is failing, or First Republic. Since they reported earnings, I think it was yesterday, the stock is down by 50% in 2 days. It's actually down by more than 70 to the low, and it's down by, let me actually go back here, it's down by more than 95% from the beginning of the SVB crisis. So we want to pay very close attention to this. We heard news today that they are weighing the sale of up to $100 billion in assets. Their market cap is currently one. That is 100 times their market cap. We also have good old reliable Jim Cramer here telling us that the stock is a very good bank. It is the new focus, and that was up here at about 70. That is 10 times higher than we are right now. What this means is that we left the title. Sorry, we left a thing in the title in regards to what you want to do now, and that pretty much comes down to being prepared for the banking crisis if it's going to unwind. So there is a lot for us to go through today, but let's make sure we don't forget about the timing and the potential for these banks to fail. There's one more thing I want to point out here. It's just the timing of the Lehman Brothers collapse to, from Bear Stearns to the Lehman Brothers collapse. It was about 6 months. So I've been talking about this for some time. I posted this about roughly a month ago now. It's now 1 month later, so we could still have months left of this. So anyways, let's jump forward. I'm going to ask you for a huge favor, please and thank you. If you could, please consider smashing that thumbs up and subscribing to the channel. Let's jump straight in. So we had a lot of stuff going on today. I encourage you to pause the slide if you want to see exactly what's here. There's some dollar alternatives, but even Bitcoin has been getting a slam today. You can buy inverse banks, which is FAS. You can also look at insurance like VIX calls, SPY puts, XLF puts, or you can bet on something breaking, meaning the financial system goes kaput and the Fed comes in. So what's so interesting to me is that we saw weakness in Bitcoin yesterday. It came in with a big move today, back up to about 30K. We talked about the potential head and shoulders here, and I don't know what's going on. That's a big move. Right back to the 50s, slam, crash land, dead cat bounce. I don't know what's going on. But what I just laid out here is that this is a dollar alternative. It's supposed to be safe. It's supposed to be doing good. We noticed that Bitcoin was down dramatically. Ether is down from the high. It's down pretty dramatically. And even gold, it was up as high as about 2,200 or roughly on that head and shoulders neckline and just couldn't crack it. Closing the day down just at just below 2,000 at 1999. Is gold going to party like it's 1999? Well, let's go further. Let's see what else we got. There's some notes that I laid out to our group this morning. So if you want to join us again, there's the 14-day free trial. You can see that up here. Go to thealgo.com to trade with me. And this is what I laid out to our group. Let's go back to yesterday. So yesterday, I said that we stopped going up. We're showing signs of weakness, a lower weekly low. We are flat in the month, remaining below 410 equals a breakdown. What do we got? Well, we got more softness. I talked about the seasonality chart yesterday and how we were looking for a key area to hold. That's this area right here at about 407.45, exactly 407.45. So we'll come back and look at this here in a moment. Let's actually just do it now. So if we look and see what the high of the day was today, well, we gapped up, we pushed up, but we cannot clear 408. That's the area we talked about yesterday, and where that head and shoulder, sorry, not the head and shoulders, the seasonality chart should have been giving us a bounce. So this morning I said, if the seasonality chart is still valid, we should advance from here. We tried. We didn't quite do it, right? We fizzled out. 407.45 was the key relative high, and the seasonality chart is in the post above, which I just went through. We also have QQQ. We were looking for 31368. How did this one fare? Well, let's have a look here. QQQ. It's up right back to that area here in after hours on Meta. We'll talk in that in a moment, but we noticed that we gapped up right to resistance. We pushed up, couldn't quite form a daily higher high. We were off by about 4 cents. And then they slammed it, and then they jacked it right back up in after hours. So what the hell's going on here? Man, I'm getting confused. Well, here's the note that I laid out to our group. And again, if you want to join us, great. Let's see what happens here. But if you guys want to join, here's the note that I laid out. So if you're wondering what you don't get by just watching the free YouTube videos, here you go. It's going to save you your butt today. Update from the pre-market stream, which means we do a private pre-market stream every day. I talked about QQQ battling for that 313.6. We had a trade algo. If you guys want to know what that means, just go to thealgo.com. Holding for now, but this is holding for now into this hourly close, which meant there was potential for a move higher. We go back to that SPY chart, and we note here that I laid out we were $1 off 417.4 at the time of the post. Trade algo was trying to fire and ready for this or the next hour. Here's the most important note. If you want to enter a trade or a swing trade, I'd wait for these levels to hold 313.6, 417.4. Algo plus level equals we have an area to establish the risk, which means today and yesterday's low of the day. If it holds, great. If it can't hold these areas, it will not advance. And again, that comes down to defense versus offense that we've talked about before. So all this means is that, man, there's a big push-pull happening off of here. And instead of just purely relying on the seasonality chart, we know it's now broken. We have to just pay attention to this area. If banks are going head and shoulders, knees and toes, dramatically lower, and technology is whipsawing, we have to be very mindful of that. I'll try to leave some time for charts at the end as well. Let's just wrap up with all this stuff here. Right back to neutral at 52. Yes, we talked about that too. How? We weren't forming higher highs. We weren't pushing further into extreme greed. So the market fizzled. It failed to catch momentum. I think we warned you about this for some time. We said the saying that I like the most that I want you to really remember is not sell in May and go away. I think it's prepare for May and be ready to go away. So I'm going to be away for a large part of May, which means that I've prepared for May. By the way, I'm crushing the market. I'm up. I think I'm beating the market by 250% year to date. So I'm prepared for May, and I'm going to be going away for part of the month. What does that mean? I don't particularly care if the market goes up or down. I have my trades that I'm making. My portfolio is doing well, and I've been ready for this. I'm insured. I got my protection, and I'm ready for the next move. So we talked about how there was a bear trap being set. They squeezed it higher. We talked about maybe selling. We talked about a crash. We talked about greed. We talked about, is it time to sell now? We talked about a record short being in the danger zone. We talked about a new low. Now we've talked about how low. So I'll leave you with some takeaways at the very end. Let's just wrap up on everything else here now. Why? There's just a lot going on. So Meta out beat, Roku out beat, ServiceNow beat. That's all that mattered for today. Boeing beat. Everything's a beat. Great. So we got GDP coming out tomorrow. Preliminary print, by the way. And this might be a little bit concerning. I'm not sure what's going to happen here, but this got revised again today. This is from the St. Louis Fed, which is where James Bullard is out of. And here we got a new revision to Q1, which is 1.13. So this is not always 100% accurate, but my spidey senses are tingling because I'm like, oh man, if it comes in at 1.1 and we're currently expecting 2, I don't know if bad news is bad or bad news is good. So I'm gonna have to pay attention to it. I'm not smart enough to know. I wish I was. If you told me that's the number tomorrow, I'd be like, well, I don't know if that's a buy or sell. So I don't know. If you want to see my pre-market notes tomorrow, again, you know where to find that. And this is going to come out at 8:30 a.m. tomorrow. We also have, so let's just make sure we got the last data point here for this week. We also have PCE coming in on Friday. So for better or for worse, it's at 0.3 here. So that's the headline number. That's coming in on Friday after GDP comes out tomorrow. We heard from Larry Summers again, out here chirping. Summers says inflation won't get back to 2% without a downturn, which means a recession. We just looked at the GDP print. Let's keep that in mind. The former Treasury Secretary said he is not that optimistic about the fight against rising prices, and the Fed lost credibility by acting too slowly. This man does not look impressed. All right, stop it already. So that's what it comes down to. Let's see if I forgot anything here, and then we're going to look at some options for some clues because I think there's some actually really big, interesting things we can look at. Let's do that. Let's come back and look at some final charts for about a minute or two. So looking here, we're looking at the calendar. We're going to look back just since last Monday, which is really going to be the last week going into OPEX, which was Friday the 21st. And the first few days, what do we have? Well, we can look here at the put call ratio. It's 1.9, and that's based on that's just based on volume. If we look here to the dollar amount, let's remove that. There's 11 billion in puts versus 3 billion in calls. Oh my goodness, that seems pretty high. Yeah, that's like a 3-to-1 ratio. So if you look at the overview here, which just tells us the most popular options in terms of premium, we've got SPX, which is basically 2-to-1 short, SPY 4-to-1 short, QQQ 3-to-1 short. We got Tesla, incredible short, 3.5 billion versus 55 million. That's a huge one. BABA, man, just sell it. IWM skewed bear. Amazon skewed bear, Netflix as well. And then over here, we got small, not even one single stock is over 100 million. NDX, STLA, Dash, Meta, Apple, Tesla. So I don't know if this is insurance or if they're betting the sky is going to fall. We're going to go down to 0. like we talked about yesterday with Mike Wilson's note, where he was so scaredy pants about big tech earnings. So we're above the 50 DMA, and there's two boxes on the chart. So what you're probably wondering is, well, which one are we going to hit? Well, let's see the percent and the risk reward here. So relative to our 50 DMA and post market at 405.6, which just means after hours, we're about 0.7% off the 50 DMA after getting a gap fill here. And then we're looking for a potential move down by about 2.2%, which will get us pretty close to our 200 DMA at 395 and also come down and fill this gap. That's about 2.2%. So 2.2. That's our risk. Okay, what's our reward? And if you're bearish, that's your profit potential. In terms of reward, well, what if we go back up to resistance or back up to fill the gap? That's the upside potential, in my opinion. So back to the 50 DMA was 0.7 up to resistance. It's about 0.7. That's a scratch. There's no risk. There's no advantage to go fill the gap. That's about 4. So that's about 4.2, right? Elon would be proud. 4.20. So 4.20 versus about 2.2. So you have to just make sure you understand that the risk reward right now might be skewed to the upside, but that's just looking at the daily chart. What if we look at the weekly chart now? So I'm going to hide everything. Let's delete it. And let's see if there's anything different that we can notice here. So let's remove. I'm actually on a log scale. Let's remove that. So here we have a breakdown. That's the start. That's what we talked about yesterday. In terms of the weakness, well, we got to get back above 410. So that's about 4.5 points. And then down to 400 is about back down to 400 is also about 5 points. I don't see an advantage there. I do see strong support at 395, some kind of IHS here. But this is a breakdown. And then finally, if we look here at the monthly chart, what do we have? Oh, crap, right? We talked about this. We formed a new low of the month today. We had 405 point something as our low. Now it's 403.78. So we made a new low of the month. We now have a monthly fail to break out. That is not good. That is not bueno. That's a fail breakout. That's a stinky, stinky thing to look at if you're a bull. And because Friday is going to be the close of the month, this does not look super fantastic. So what this means for me is that I had some hedges put on. Those targets have now hit, which means when we got down to just below 405, I started to exit those. But let's have a look here at the heat map. Let's have a look here at the heat map and see exactly what is going on for after hours because Meta came out. We told you would beat. Let's have a look here at post. So we got Meta up 12, everything else flat. So it looks like Meta guided really well. It was up 8 last time I checked in. If we keep all of that in mind, let's look at look at QQQ. Just as a last one here, we briefly touched on everything else yesterday. So watching that post or after hours, we're currently at 313.9, which means we are over this area at support. I want to see a daily higher high, which would mean we're advancing. It means we're starting to break out. Maybe we're going to go for 325 or higher. If not, I don't know what we're really expecting here. Probably down in the short term, down to support, just like Bitcoin did. So remember, we look here at Bitcoin. We looked here on the 50-day. Sorry, went here. Exhaustion higher, can't really get higher. There's your short-term head and shoulders, comes down, bounce off the 50, revisit the 50. Yeah, I could see that happening if we fail to hold 313.8 to 314. I could see it coming down here, hitting it once, coming back down to retest it twice, and then maybe going higher after. Or that could just be it. We can't form a higher high. We just fade down here, and then we go for a test onto our long-term uptrend at about 300. So, all right, that's fairly simple. If you need to replay and rewind, please do it. I'm trying to explain as simply as I can. Here we are at risk of a death cross, which just means there's a momentum issue, which means short-term momentum is only a little bit more bullish than long-term. Still have bullish volume. We do have that breakdown here, lower highs, lower lows. We're battling for that key relative high. That's not looking super bueno either, right? Not all that great. Looking at the monthly, it's now losing that pivot we talked about at roughly 313.7. So there's a lot more at play here, but to keep it very simple, I'm not going to go further. I'm going to encourage you to watch the weekend deep dive now queued up, which goes into much greater detail. And with that said, thank you so much for watching. I look forward to seeing you tomorrow. Thank you again.